Hi, Kaushik Charji. Once again, I'm back. In this video, again, we are going to discuss a very interesting topic and very popular discussion also on the home loan part. So, though this is not a home loan, what I'm going to discuss now, it is a loan against property. It's typically known as a mortgage loan. So, across the globe, when people know this terminology, there are people even they will be willing to get this kind of loan, right? And they will be also looking out some of the financial institute how they can fund and what extent they can go for get the fund. So this is not a home loan. First of all, this is not a home loan. This is a non-home loan. I'm just talking now. And LAP is nothing but loan against property, which is your mortgage loan. So when I'm talking about loan against property, so I think typically you will understand the loan what I'm going to get now or what I'm going to get from the financial institute, that is based on my property, against on my property, right? So there is again a fundamental difference. First let me complete on this. In home loan, what happens earlier, whatever you have discussed, you might have watched even last couple of videos what I have discussed entirely about home loans. So in home loans, actually, you are actually legally not the owner for your own house or let's say own flat or let's say own apartment. Yes, I'll repeat it once again. It might be a very stranger to you. So legally, if I'm going to apply for a home loan, even for my house, for my apartment, for my whatever property when I'm going to purchase based on my home loan. So I legally am not the owner. Who is the owner? The bank is the owner. The financial institute is the owner. Who has funded you? They will be the owner till the time you are not even paying back the amount whatever you have borrowed. So I hope I'm very much clear now, right? But in LAF, loan against property, the first thing is you will be legally owner for your own property. You have, let's say, a piece of land, you, let's say, an ancestral house, you, let's say, you have your flat, you have your apartment, whatever you have, that you are going to keep a mortgage to, let's say, to the financial institute, and keeping that you are going to get your money. You are going to get the fund from the bank based on this amount, based on this cost. So again, if I come to the cost, yes, definitely bank is going to evaluate your property, like whatever property you have. Let's say today, if let's say if I'm giving an example, let's say this is my own house, and let's say this property cost is as per the banking cost, if it is around 1 year, as per INR, as per Indian currency, if I'm talking. So on that 1 year, bank is going to fund maximum. That is also maximum. It is 70%. More or less, it will be there. But yes, the maximum I can say you it will be 70%. So out of 1 crore, what is the 70%? It is very easy, 70 lakhs. So I'm eligible to get the fund of 70 lakhs. But again, my eligibility, my it will be coming again on my income, the kind of source even income I have. Based on that one, again there will be a different calculation that probably we'll discuss sometimes later. But yes, ideally the funding part, it will be decided by evaluating on my property cost. Out of 1 year, 70 lakhs will be my maximum limit. Now how much I'll be able to get, that again the calculation will be different, right? So keeping that property, let's say if this is my property and keeping that, so it is very easy for the bank also to justify, yes, the Kaushik has this kind of property, Kaushik property cost is so much, so, and I can fund for this and this. Even the Kaushik is not even paying back me, the property is there with me, but legally I'll be the owner. Bank is not the owner. This only I'm pledging. Try to understand. The pledging is different. I am just keeping for certain period till the time I repay the loan to the bank. Till the time it will be just as a mortgage to the bank. The certain amount on my evaluating part, it will be funded to me based on my own income, so that I can pay even easily the repay part of the bank, and it will be given during that time period on. So again, if I talk like it's a different product, different financial institute, different products they have, different tenure they have, right? The different rate of interest they have. More or less, if you ask me, the tenure it can be start around 5 years till the 30 years is the maximum. More or less, it will be there. Again, depends on your age, depends on your eligibility. But ideally, 5 to 30 years 10-year I'm talking. Again, yes, definitely the rate of interest, it will be different. Ideally, if I look out, as I've discussed even last last couple of videos on the home loan, so normally it will be a little bit higher from the home loan, that much I can say. So let's say if I'm giving an example of X, so here it will be X plus 1, X plus 2, like this. The LAP or mortgage loan rate of interest, it will be a little bit higher, right? So very interesting. People are, let's say, a business community, people are, let's say, looking for easy money, easy funding, not easy money, easy funding, and they want to just keep something, pledge something, and they want to get a good amount, and for a longer tenure kind of home loan even benefit they are going to get. So this is the only one solution, this is the best solution I can say, and that is all about the loan against property, the mortgage loan, which is not a home loan, it is a non-home loan, right? Thanks for watching.